Leaving your current job to make a transition, or what if you were to lose your current job? Are you prepared financially for either scenario? Financial expert Marshall Clay with the Welch Group joins us to help you prepare for the what ifs. Good to see you.
Hey, good to see you.
Several factors to consider here, but let's start with people who may be in the short-term transition consideration period.
Right, that's right. So you want to address those short-term needs that you have. We've talked a lot in the past about developing that emergency cash reserve. Well, this is really what it's for. It's for those unforeseen expenses or unforeseen job loss. And so obviously addressing that short-term need, a big part of that is that emergency cash reserve. Another thing that people are probably familiar with is filing unemployment. And I would tell people, do not be apprehensive about doing this. I mean, this is money that you've paid into the system in terms of your tax dollars that you're really getting back. Don't feel guilty about filing for unemployment.
Yeah, but do you, for unemployment though, you need to be fired, right? If you lose the job on your own volition, then
yeah, that's correct. I mean, if you have a new job and you're in some sort of transition period, you may find it difficult there.
Gotcha.
But certainly, if you lose your job, filing for unemployment is obviously you have to be actively looking as well. That's a component of that.
Okay.
But then another thing is using lines of credit, right? Hopefully, they have a home equity line of credit or something like that that they could tap into that could fill some of those short-term liquidity needs. But I advise folks, make the investment accounts a last resort. Do not look to tap into 401ks or IRAs or after-tax brokerage accounts unless you absolutely have to, because there can be taxes, penalties, fees, things like that.
That's like added emergency. All right.
That's right.
What about insurance considerations?
Yeah. So certainly health insurance is always kind of primary when you lose your job or you're in transition. What am I going to do if I get sick between now and my next job? And so obviously, if your spouse is working and they have a plan, that's a good place to look. COBRA is something that allows you to extend on your previous employer's health care plan for maybe 18 to 36 months. And then obviously, if you don't have either of those options, going on the health care exchanges to sort of fill that gap is very important. And I also tell people, don't forget about that life insurance aspect. There are a lot of folks that have these group life insurance plans that when they lose their job or they transition away, that life insurance also goes away.
Right.
So there could be this weird perfect storm scenario where you lose your group term or your group life insurance. Something happens to you during that transition period, and it can be pretty devastating.
All right, real quickly, if somebody has a 401k with the current company, they leave, what should they do?
Yeah, I would say definitely look to roll it over at least to your new company 401k plan or to a rollover IRA at a new custodian. The last thing you want to do is leave that 401k behind. There are hundreds of thousands of old 401ks that are left behind every year. Those are typically not managed very well, so you're not getting that retirement benefit that you need.
Don't just ignore it. All right, that is Marshall Clay with the Welch Group. Thank you so much.
You're welcome.
All right, we'll be right back.